Hello, this is Arthur Hill, Senior Technical Analyst with StockCharts.com. It is Tuesday, May 1st, and you're tuned in to On Trend with Arthur Hill, of course. And today we're going to keep you on trend by looking at some breadth indicators. So today's agenda is going to cover three breadth indicators. First, we're going to look at AD%, advanced decline percent. Then we're going to look at high-low percent, new highs minus new lows divided by total issues. Then we're going to look at the percentage of stocks above the 200-day EMA. And then we're going to show you how to take a weight of the evidence approach to broad market analysis. So we're going to use three indexes for our breadth indicators. And taken together, these three indexes make up the S&P 1500. So basically you have the S&P 500, $SPX, the S&P Mid-Cap 400, $MID, and the S&P Small Cap 600, $SML is the symbol there. Now that represents the large cap universe, the mid-cap universe, and the small cap universe. Sure, it's not the entire universe, but these 1,500 stocks are as close as you're going to get to the market as a whole. I think it's a great index, a great trio to use for breadth indicators. All sectors are represented in the S&P 500, 1500, and 500 for that matter. We have stocks from both the NYSE and the NASDAQ. And most importantly, here at Stock Charts, the breadth indicators for these indexes are available and we can chart them. Now, before starting with this, I want to show you something that I think we should not be doing. We should not be charting the S&P 500 with the AD line for the NYSE, because the NYSE is its own animal. All right, the NYSE has 0 stocks from the NASDAQ, obviously. Hundreds of non-US stocks are also traded on the NYSE. Those would be lots of ADRs. You also have a relatively low weight for the technology sector. Now that might be good or bad, but if you're comparing the NYSE with the S&P 500, it doesn't make sense because the S&P 500, of course, has a big weighting in the technology sector. Now, when we look at the S&P 500, we have 374 stocks from the NYSE. So yeah, the majority are from the NYSE, about 75%. But 126 stocks are also from the NASDAQ. So you have a big weighting in there from the NASDAQ, 25% of the stocks. And you have all 10 sectors represented in the S&P 500, and technology is 25%. But I think the main point is, if you're going to look at the NYSE AD line, compare it to the New York Composite. Okay, don't compare it to the S&P 500. If you're using the S&P 500, use the breadth indicators I'm going to show you next to compare to the S&P 500, because we use breadth to see how the underlying stocks are performing in that index. And so we need to compare it to the right index. All right, AD%. Now we're using AD% to measure breadth thrust. AD% is advances minus declines divided by total issues. So in this example, if you have 250 up, 250 down, that's going to be 0 divided by total issues, 500, 0. So that's basically a flat day. On an up day, you might have 425 stocks up and 75 down. So your net is going to be plus 350. Net advancers plus 350. Your AD% is going to be plus 75%. And that's a pretty good number. On the flip side, if you have 75 advancers and 425 decliners, your net advancing number is going to be minus 350 because you had way more decliners. And so you're going to have an AD% of minus 75%. And so these numbers are important, as you're going to see on the next chart. I've got the AD% indicators for the S&P 500 at the top, the S&P Mid-Cap 400 in the middle, and the Small Cap S&P 600 at the bottom. And I've got a histogram here with horizontal lines at plus 70% and minus 70%. Because those are kind of like thresholds that I think once you exceed them, that shows some pretty strong buying pressure. You'll remember in the past, people used to use those 90% days. When you had a 90% up day, that was some seriously strong buying pressure that could put in a bottom. Well, I've just kind of put it at 70% because when we had all that volatility in 2010 and 2011 and in 2015, early 16, we had a lot of 90% days. And so I'm trying to look more in aggregate. But if you look here in aggregate, you can see in early February, we had 3 plunges below that minus 75% level in all 3 indexes. So that was a lot of selling pressure. And then we go forward and we can see we've had a number of readings above plus 75% since late March, going from late March to the middle of April. But if we look most recently, you can see that we fell short on the latest bounce. So this is a one-day bounce that got above 75%. Here are 2 bounces that got above plus 75%. And we had a nice big bounce last week, but we didn't get above plus 50%. And if we look at mid caps, we didn't get above plus 25%. And if we look at small caps, we didn't get above plus 25%. So that bounce last week was weak. Now, instead of using, those daily readings and try to sort out, every day and up and down and add it up in your head or something, I just take a 10-day EMA of 80%, which is what you see on this chart. And on this chart as well, you can see in the top, I've got the S&P 500 with the 50-day moving average and the 200-day moving average. So we've got horizontal lines at plus 30%. So if you get a surge above plus 30%, that is a bullish breadth thrust. That shows strong buying pressure that can be enough to put in an important bottom. If you get a move below minus 30%, that shows strong selling pressure that can be the start of an extended decline. And if we look here, we can see we had a bearish breadth thrust in early February when all 3 moved below minus 30%. Boom, boom, boom. So we had 3 breadth indicators turning bearish in early February. And then in March, we had confirming signals. And what is concerning is in between, you see, when the March, we had that rally from early February to mid-March. We didn't get above plus 30%. And we had another rally from late March to mid-April, and we didn't get above plus 30%. So breadth was falling short. There wasn't enthusiasm in this rally or in either one of them, basically. And you can see that we fell even shorter on mid caps from March to April, and small caps also fell short. So until we start seeing some moves above plus 30%, I don't think this correction has fully run its course. It hasn't ended. All right, the next group we're going to look at is high-low percent. And this is used to measure leadership. And we want to see a certain percentage of stocks showing leadership. All right, we need some leadership out there to pull the market higher. High-low percent, just like 80%, is measured the same way. New highs minus new lows divided by total issues. You have 60 new highs here, and you have 10 new lows. Then you have plus 50 net new highs. And you divide that by the total issues in the S&P 500, and you get plus 10%. Now, if you have 10 new highs and 60 new lows, then you have a minus 50, and you have minus 10%. And those plus 10% and minus 10% numbers are important, as you're going to see in the chart just after this. But first, I just want to show you a chart that shows new highs and new lows arranged in a unique way that you can do at stock charts here. But basically, we have new highs in green, and I've got a line at 50. This is the S&P 500, so 50 is the 10% level for new highs. And I've got a line at minus 50 for new lows. So that's the minus 10% level for new lows, if you will. So for mid caps, I put it at 40 and minus 40. For small caps, I put it at 60 and minus 60. And you can see here, we were getting above 10% in May, June, July, all the way until January. And we had a couple forays in March, in February and March here. But, since late March, new highs have not been able to get above 50. We haven't been able to get above that level. We haven't seen an expansion in leadership that tells you that the rally is broadening. And this is a concern for the current market environment. Now, this next chart shows high-low percent, the indicator I just showed you. And you can see regular forays above that plus 10% level. And we didn't get below minus 10%, except for mid-caps. So for mid-caps, we had a signal there. We didn't get a signal for small caps in February. So only one of these three indicators triggered in the middle part of February, early part of February. But mid caps recovered their signal with a bullish signal in March. So all three are back on bullish signals. And the important thing to remember is it takes another signal to negate the other signal. So, we've been on a bullish signal for a long time here. We need to get below minus 10% to negate that bullish signal. And that would be for at least two of the three. And you can see here, we haven't been above plus 10%. And that shows you that leadership is lacking in the market right now. All right, now we're going to look at the percentage of stocks above the 200-day EMA. And this is to measure trend participation. 200-day EMA is a trend following indicator, as all moving averages. It's a long moving average, so it's going to be a long-term trend following indicator. And as such, this is going to be more of a lagging indicator. So basically, we're looking for 60% as our bullish threshold. So if you get a move above 60%, that's a bullish signal, stays valid until you get a move below 40%. That is a bearish signal. And one signal, again, cancels out the other. So I've got this chart here, and you can see I've got the S&P 500 and S&P Midcap 400 and S&P Small Cap 600. And you can see the S&P 500% above 200-day EMA was above 60% for most of 2017. And you got below 60% for the first time in February, but you haven't gotten below 40% there. By the way, those horizontal lines you see at 60% and 40%. And the reason I didn't use 50% is because you get too many whipsaws. If you use that middle line, you're going to get a lot of moves above and below. It's like using a close above and below the 200-day moving average. If you use just a 5-day moving average instead of the close, you're going to reduce whipsaws, and I think in the long run, you're going to be better off. And so that's why I didn't use that 50% line for bullish and bearish signals. I put my bullish threshold just above 50% at 60%. So when 60+% are in uptrends, that's enough for me to be bullish. But when 40% or less are above the 200-day EMA, which means 60% or more are below the 200-day, that's enough to turn bearish on the long-term trend for the market. So you can see here that, we had some dips below 50% in mid caps and small caps. And now we've kind of just been hovering around this 60% line for the S&P 500. We've kind of been hovering around that 50% line for mid caps and small caps. So there's not a lot of direction out there. We kind of go, up and down and up, and maybe we're turning back down again. There's a lot of stocks that are kind of like on the edge, right at that 200-day EMA. So it doesn't take much to move that line from, say, 45 to 65 and then move it back down to 45. but we haven't seen that big down thrust to push it below 40% and get that bearish signal. All right, so now we're going to put all these breadth indicators on these three indexes and show you how to take a weight of the evidence approach to broad market analysis. So basically what we have is three indexes and three indicators for each index. That's 9 in total. So you have a majority right away. 5 of 9 are bullish, you're in a bull market. 5 of 9 are bearish, you're in a bear market. So the 80% indicator is the most sensitive. It's going to trigger the most signals. It's usually the first to signal, as we saw in February, but we have yet to get confirming signals from high-low percent. Almost tilted the balance there you saw in February, but mid-caps flipped back on a bullish signal in March. So high-low percent is yet to trigger. And the percentage above the 200-day EMA, it's a lagging indicator. Are we going to pick a top with this system? No. Are we going to trend follow? Are we going to catch the biggest part of the move, hopefully? Yes, that is the idea. The idea is we wait for the evidence to turn and we trade accordingly. So we're using this to define the broad market environment. Are we in a bull market or are we in a bear market? So I've created a little table here, and there you can see the three indexes, and there you can see the three indicators. So we have 9, and the red shading shows indicators that are on a bear signal and the date. And there are the three 80% indicators. So they've been on bear signals since February 5th when we got the bearish breadth thrust. And those signals have yet to be countered. All right, we look at high-low percent. We had bullish signals in March and June, and then in March 2018. So these are 2016, by the way. So mid-caps flipped from bearish in February, I believe, to bullish in March. And then we look at the percentage above the 200-day EMA. This indicator has been net bullish since March, April 2016. As I said, it's a long-term trend following indicator. It was bullish for over 2 years, caught a very nice uptrend. And so I take the net of these. So when you can see that 2 of these 3 indicators are bearish, we have a net bearish signal, but we haven't had one yet. We had a net bearish signal for mid-caps in March, but that flipped. Actually, that was in February, but that flipped back to bullish in March. And small caps have been net bullish since April 2016. All right, so next I want to show you some live charts, and we're going to show you the current breadth charts. We're going to show you how you can create these charts, and we're going to show you where to find the symbols for these charts. All right, so first let's see how we can find all these great symbols to create all these great charts. Well, on any web page here at Stock Charts, you go to the top right and you're going to have a search function there. And if you type in your term, and I'm going to type in advance and decline and percent, which means that the results have to include all 3 of those words because they're joined with and. If I used or, then it could be advance or decline or percent, and I would get way too many results. But by using and to ensure that all 3 of these words are present, I'm going to get those symbols that I'm looking for. So I click search and I'm going to get the results, and I'm like, oh wait, oh, it says support articles, but that's not what I want. Well, that's a drop-down menu there. All right, and then you can see, not seeing what you want, well, I can click symbols here, or I can click this drop down here for symbols. So I'll just click symbols, and boom, I've got all the symbols that have advance and decline and percent. And we've got the Dow, NASDAQ 100, Dow Transports, all the sectors, the gold miners. We also have advance decline volume as well, if you like that indicator. So you can create a number of breadth indicators for your indexes to really enhance your analysis there. Now, if I want high-low percent, I'm going to do pretty much the same thing. Instead of advance and decline in percent, I'm going to search for high and low in percent. And again, I'll get all those symbols there. And you can see there's a really nice naming convention here that you can use to pretty much figure out the symbol. You can see that these high-low percent symbols end with HLP, all right? And they all begin with a dollar sign. And that in between the dollar sign and HLP is basically the index symbol. SML for small caps, XLK for the technology sector, MID for mid caps, SPX for the S&P 500, XLY for the consumer discretionary sector, GDX for gold miners. So it's really easy to figure it out, but if you can't figure it out or if it doesn't work, you can always do the search function to find all the high-low percent indicators. And then the other one I'm going to look for, it's a bit trickier. And remember, I'm using this terminology to separate because there are a lot of symbols there. And if you can just find one symbol, and then you can search for the terms that match for all the symbols like percent and stock and above, these three terms here, all right, then you're going to get all these indicators that are appropriate. And we've got the percentage of stocks above the 150-day EMA, 50-day EMA, 200-day EMA. So we've got lots of indicators here to work with. We've got medium-term, long-term, and really long-term indicators. We've got them for the NASDAQ 100, the S&P 100 index, the S&P 500 index, the TSX for the Canadians. Greg Schnell would like that one. And if I go back, then you can see the entire list. So a lot of things to do here with breadth indicators. All right, now let's look at some live charts so we can see what's happening now. And more importantly, how can we create these indicators to use them in the future? Because that's what it's all about, learning techniques and applying them and learning from them. So if we look at the AD percent indicators here, I've got the S&P 500 in the top window with the 50-day and 200-day EMA. That's kind of my default for the market index. And then I've got the 80% indicators as the 10-day EMA. And you can see that two of the three triggered bullish in early March 2016 with that breadth thrust. And they stayed bullish until three of three triggered bearish on February 5th, 2018. So that was a really nice long run. And again, these are early signals. As you saw from the table, we don't have confirming signals from high-low percent or the percentage of stocks above the 200-day EMA just yet. But we have had a double bearish breadth thrust. So you can see the individual charts that triggered these signals. We had two of the three trigger in early March here. That would be mid caps and small caps. And then the S&P 500 didn't trigger until the end of June. And then all three triggered, of course, in early February. And I've also got the indicator for the NASDAQ 100 as well on this chart. Now, how did I create this chart? Well, what I had to do was I had to add the indicators twice. And so I went to the indicators. You choose price as the indicator, add it twice, and add the symbol in the parameters box. And you put one behind the other. All right. And then I opened up advanced options. I chose invisible because if you don't choose invisible, you're going to get these histograms or jagged lines showing every up and down move, and that's going to clutter up your chart because you don't want to see the daily fluctuations. All right, all I want to see is this 10-day EMA, which I've added. And then I need the horizontal lines. That's why I had to add it a second time. So I've got a horizontal line at minus 30, 0, and 30. And I did that for all three plus the NASDAQ 100 to get these indicators here. And I put a date and time axis in between to help separate them on the chart. There's that date time axis in between. All right, let's move to the next one, which would be high-low percent. And it was created a similar way. And there you can see on March 29th, it was a bit later than the 80% indicators for triggering bullish when two of the three moved above plus 10%. And that would have been first the S&P 500 triggered, and then the mid-cap 400 triggered, and then small caps did not trigger until June there. But they're still on a bullish signal. because we have yet to see two of the three break below minus 10% to trigger bearish signals. And again, I didn't use the zero line because you can see if you use the zero line, you're going to get lots of signals. And that's why I created the bullish and bearish thresholds. The bullish threshold just above zero, plus 10%. The bearish threshold just below zero, minus 10%. And then if you look at the settings on this chart, it's very simple. High-low percent, SPX HLP. I did histogram for the format. The height is 1 because I like them all equal. And then I added the horizontal lines at 10, 0, and minus 10. All right, now we've got the percentage of stocks above the 200-day EMA. And you can see that as far as the signals are concerned, we got net bullish on March 18th when the S&P 500 and the S&P Mid-Cap 400 were on bullish signals, and small caps followed in April. And you can see that we've had dips below 50% in mid-caps and small caps. That's the blue lines there. And each time we had a bounce after that, except for this March one. In February, we had a bounce. We dipped back below in March, and we had a pretty weak bounce. So that is a concern, but we have yet to move below 40% to trigger those signals, those bearish signals. And if you look at the settings, similar, there you can see I've got exclamation point GT200 SPX, and then MID, and then SML, 3 indicators. And I added a horizontal line at 40, 50, and 60. And actually, you could clean that up and probably just add a horizontal line or horizontal lines at 40 and 60 if you would like. There you can see 40 and 60 because, 50, you're going to get lots of crosses and lots of whipsaws. And if you want to use 50 to show those pullbacks, that's okay. But I think for the bullish and bearish signals, for the long-term broader market, I would use 40 and 60. So that concludes this presentation on breadth indicators and a weight of the evidence approach that is designed to keep you on trend. And when I say on trend, I'm using the on trend for the broad market and also for your individual indexes and sectors. You can use these breadth indicators. So thanks very much for tuning in and have a great day.